Happy Monday, everybody. I hope you had a great weekend. Today is November 21, 2022, and this is your Monday Market Update. Last week was another big week in a year full of big weeks, so let's jump right in, recap last week, and preview this coming week. Stocks opened a bit lower last Monday as Fed head Waller spoke over the weekend. It was a bit more hawkish than the data from last week. Waller threw cold water on the previous week's 5.5% rally. The Fed, according to him, has a ways to go before ending rate hikes. This was a bit of a big deal since the prior week's CPI had the market thinking about peak hawkishness. China also made some moves possibly to make changes to their zero COVID policy. Recall that this is one of the keys to the market, in my opinion, a new government stimulus plan for the residential real estate market and some movement on the COVID restrictions. We got news from Apple about a hiring freeze, Amazon laying off in big numbers as well, and some New York Fed info on an estimated increase in the unemployment rate in the coming year. Stagflation fears entered and brought some risks off again. Fed Chair, Vice Chair Brainerd made some slightly dovish comments, but stayed focused on attacking inflation. The market took a run for higher prices, then sold off at the end of the day, ending on the lows. S&P was down just under 1%, Dow down about 0.5%, and the NASDAQ down a bit over 1%. The PPI report sent the markets up again on Tuesday as the gasoline on the fire of hopes for a Fed pivot. The print missed expectations and was on the lower side, not higher as we've seen for a while. The China-U.S. handshake had people thinking that the relationship was going to get better. Then missiles land in Poland. Yes, Poland, the NATO country. All News initially reported that this was a Russian missile, and the talk started about Article 5 of the NATO Pact. That is, attack on one is an attack on all. There were 2 deaths on the ground, but as the news got clarified, this was not a direct attack. Seems like more of the remnants of a Russian missile that was shot down by Ukraine. Either way, markets ground back higher, closing near the middle of the range. Overall, what seemed to be an escalation in geopolitical situation was not. This is just a reminder that things seem to be getting slightly better on this front. The missile attack seems not to be an escalation. I guess that's not getting better, it's just not getting worse. But for the getting better end, backdoor diplomacy is being reported with Russia. Add in the president's handshake with China, things could be getting better on this front. I'm not saying it'll happen anytime soon, but this is another key to the market, in my opinion. And if this gets better, we could see more risk on money come in. The Dow was up slightly, the S&P just under 1%, and the NASDAQ was up just about 1.5%. Wednesday brought the focus to consumer again. Recall I spoke about this last week. We are still a consumer-driven economy, and retail sales were out. We had Target provide another huge disappointing quarter, and the stock got clobbered, similar to what happened the last time they reported. So you think you know where the retail sales numbers are going to come in? Well, no. It came in strong, beating expectations. It was encouraging, but it brought about the good news is bad news question again. Really, though, the numbers were not as strong as you may think since they are not adjusted for inflation. As we've said before, if overall costs are up, inflation, then the overall retail sales reported number will also be up. So there was some good news there, but not as great as many would like to think. So the mixed retail sales news, add in the fact that Micron, one of the semiconductor majors, forecasted challenges ahead, and this after a big move up in the semis over the past week or so. Overall, things got quiet in the afternoon. The market closed a bit lower. The Dow was down just a hair, S&P down about 1%, and the NASDAQ down 1%. Thursday, the market gapped lower following some Fed speak. Bullard sounded out of his lane, but when he uttered the number 7, as in the terminal rate between 5 and 7, that had everybody on its toes. Kashkari added his hawkish too, and then the market went haywire. The market did recover a bit and hold the 3,900 level of the S&P. The Dow ended flat. S&P and NASDAQ each down about 1/3 of 1%. Friday opened a bit higher as high-level talks were reported with Russia. So that'll be big news one day, we hope. Remember, though it is not, it is no longer the only geopolitical conflict out there right now. It is the loudest in the room. Option expiration threw the market around near the end of the day, and the markets found their legs. S&P and Dow both up about 0.5%. NASDAQ was almost exactly flat. For the week, as weeks go, after all the sound and fury, it was a bit of a sleeper compared to recently. Dow was up 0.11%, the S&P down about 0.5%, the NASDAQ down 1.5%. This coming week's a short week. No trading on Thursday and a half day on Friday. Not to be left out, the Fed heads overall will be in the spotlight and inflation on the front burner. In the short week, we'll hear from Daly, Mester, George, and Bullard. Wednesday, right before you check out for the week, maybe, if that's what you're doing, well, we'll get Fed minutes. There should be little surprise there. The big one is the University of Michigan survey. This one is getting more and more important since it reports inflation expectations, not of the Fed, but of consumers. And this is the key for the Fed. We'll also get a bunch of earnings this week, and the big bombshell as we come into the week was the major management change at Disney. Does it matter to the markets or to your plan? Not really sure. Stick to the plan. Let's talk about the goals, and we'll get year-end actions done. Reminder note, there may or may not be a video on Friday. It's difficult with a short week. I apologize in advance if we don't get one. Have a great week, and happy Thanksgiving.